Hi, I'm Rob.
And I'm Rob.
And this is Ask Rob and Rob.
Welcome to Ask Rob and Rob, where no prizes will be dished out for guessing which question we are tackling this week. Lots of people have been thinking it. Adam has gone and asked it, so we'll be addressing that in just a sec. But first, a quick reminder, as always, of how to get your own question in.
Yes, it remains the same. The telephone number is 013 808 00035. Call us up, leave a voicemail, and you can get your question on the show. Or you can go to propertyhub.net/ask. That's exactly what Adam has done. So let's listen to his question, a question that many of you have.
Hi, Rob and Rob. My name's Adam. Thank you so much for fantastic information and inspiration that you've given us for years. My wife and I are cautious investors. We've got one buy-to-let. We are in the process of purchasing a second. So the point of we've got a sale agreed, instructing solicitors and so forth. This is a question that's going to be on lots of people's minds, but looking at it particularly from our point of view, the C word, coronavirus. What do you think the impact is going to be on the property market for the next 3 months, 6 months, 12 months? Any thoughts, any advice? Really appreciated. Please keep up the good work. It's fantastic.
I've got a feeling, Rob, this answer might be slightly longer than our normal Ask Rob and Rob, because there's so much to unpack here. This isn't a one-episode hit where we're going to be able to give you all the answers and you're going to go away happy. It's going to take a bit more than that.
Yeah, so we'll hit some of the immediate points now, but this is definitely not a quick 5-minute jobby. So we're going to dedicate a full episode of the Property Podcast to this subject next Thursday. And for the next little while, we're also going to start putting out a third podcast each week. Every Friday morning, we're going to get on the mic and have a pretty raw, unedited chat about what's happening in the markets, in property, what we've observed from all the conversations we're having, and put it out there quickly because things are always changing. Because, Rob, we actually had that conversation without recording on Friday. We thought, actually, this is probably going to be interesting to quite a lot of people.
We are very fortunate in the position we're in because we speak with developers, FTSE-listed developers, small developers. We obviously have a very geeky interest in the economy and how it works. We got into some depth about value of shares right now. So we thought, wow, actually, this is good stuff. Let's put it out. So let's say for at least the next 6 weeks, we're going to do a market update every single Friday. As Rob said, it's going to be raw, it's going to be unedited, but it's going to be real. It's just going to be us talking about how things are right now, where the risks are, but also where the opportunities are. There's both. So that is happening every Friday for the next few weeks. On Thursday, we're talking about the budget specifically, and of course we'll end up covering the coronavirus there as well. And then, as Rob's already said, the week after, we'll be talking about the coronavirus in depth as well, a more big picture look at it. So loads to be going on with. If you're working from home and you've got a little bit more spare time, you'll be able to pick up an extra podcast. So at least there's one win there anyway. But let's get back to Adam's question, Rob, because there's been an immediate impact in some parts of the market and some of it negative. There are also obviously opportunities as well, and we can get onto that. But let's talk about how the market has changed pretty quickly.
Yeah, the interesting thing is we've all seen what's happened in the stock market over the last week. That's not happening and not going to happen in property because, for a start, you can't panic sell property, which is actually a really good thing, but also takes far longer for price discovery to happen. What has already happened and will continue for a little while is activity has come to a standstill. So first, there's transactions that are already going through. Those transactions are going to unbelievably take even longer than usual to go through because solicitors and mortgage lenders are going to be having the same issue that all companies are at the moment in trying to get everyone working from home potentially, and that's going to really slow things down. You're also going to get some people pulling out of transactions at the moment. Some of them because they're worried about their job and their financial situation. Some of them just because of general fear and uncertainty. And there's also, I haven't seen any data on this, but I would be shocked if it were any other way, going to be an enormous drop in new properties coming onto the market at the moment because who's going to invite other people to come and wander around their house at the moment? It's just not going to happen. So there's lots of uncertainty and conjecture and guesswork around this, Rob, but I think the sudden and drastic drop in transactions is one thing we can say for sure.
Yeah, transactions will decrease. It might not be instant. It's not going to drop off a cliff. It takes time. It's going to slow down. Solicitors, as you've said, Rob, already are pretty slow in the best of times, so their normal levels of performance will drop. Something else that you're going to see right now is that if your property is vacant, it probably will, almost certainly will, take longer to let because viewings are going to be difficult to hold and soon, for a short period, maybe impossible. So if you do have a vacant property, you might want to consider just slashing the rent, getting somebody in for the short to medium term. Get someone in for 6 months, maybe 20-30% less than you wanted, but it's better having an income than no income at all. The upside, though, for those who have tenants, and there is an upside here, is that people are less likely to move on and leave. So if you've got a tenant in, and in the back of their mind they were thinking about serving notice, they probably won't right now. So the properties that you have that are let, you can feel pretty comfortable that they're going to stay let, at least for the next few months. One property area, Rob, that people won't feel that confidence, though, and are going to struggle because when they have a tenant, they move out pretty quickly, is serviced accommodation. Or holiday lets.
Yeah, holiday lets are going to be hit really hard. When there's a drop-off in activity as sudden and severe as we're seeing right now, pretty much every business all the way down the line gets affected at some point. But travel, tourism, events, that kind of thing clearly is going to be the first to be hit. I heard from someone a week ago who operates holiday lets, and he said that from the people he was talking to, they were kind of pricing in a 50% reduction in bookings. I imagine a week on, with everything that's happened since then, that's going to be an even more severe drop now. The extent of the impact will, of course, depend on where the property is. So anything focused on business travel, I would have thought would be particularly hard hit. It's possible that if you've got a cottage in the middle of nowhere, someone will rent it out as a place to go and escape for a while. I don't know. But not much in the way of silver linings for the holiday lets industry for however long this goes on for.
It's also worth saying that the normal rental market may see a slight increase in arrears as well. Don't think it's going to be dramatic because the government has made it pretty clear they want to support businesses and therefore employment. But of course, some people are going to lose their jobs. So I think it'd be naive to say that we're not going to see at least some sort of increase in rental arrears. So if you have landlord's insurance, that's looking pretty good value right now. And of course, if you manage to get a new tenant in the future during this period, landlord's insurance would look very attractive right now.
So this is all sounding pretty grim. Does that mean that you shouldn't be investing in property right now? What if you've got a transaction that's currently going through, which a lot of people listening to this will do and will be feeling nervous about? Well, it depends. If you're buying a property to flip and you are planning to turn that flip around very quickly, like in the next few months and get it back on the market, then maybe there is cause to be nervous because the biggest variable here is we don't know how long this is going to go on for. It's possible that by the time you've done what you're planning to do, the market will have returned. It's possible that that won't be the case. So if you are about to buy a property to flip, or if you're in the midst of a flip right now, I would be shoring up plan B and making sure that I could rent the property for a period of time to cover costs if the market isn't amenable to selling at that point. But what if you're buying a property to hold for the long term? Well, in that case, I wouldn't be worried. Remember, Adam's question is asking about up to the next 12 months. The next however many number of months will be weird and will be difficult, but it is only a short period of time. Your property might be harder to initially let out, as we've already talked about, but the longer your investing horizon, the less impact a few months or even a year is going to have on the results of that investment.
So you might be feeling a little bit negged out right now. And you know what? With the media doing what it's doing, it's understandable if you do. Because if you let the media be your guide, the world is a scary place and so are investments. But what may not surprise long-term listeners to the podcast is that, actually, as the news gets worse, we get, for property, more excited. And that's what last week's private conversation, and these conversations will be very public soon, was all about. We weren't talking about, how we're screwed. We're talking about how can we best take advantage of the markets right now. It's an incredible position for those who are a bit braver because so many people are going to pause on their investments right now. For those who invest, they're going to get the best deals. They really, really are. This, in the long-term play of property, is going to be a short period. It doesn't feel short now because you're living it, but it is going to be short. It depends on your definition, of course, but we're talking months. How many months? Lots of people will debate, but we're talking months. During that period, you're going to have buying opportunities. Once certainty comes back, and let's use that 12-month time frame, I actually think the market will fire on quite aggressively because people are like, yeah, we're alive, let's go, let's do things. I think more holidays will be booked, more investments will be made, more babies will appear. It'd be like a post-war boom of enthusiasm and lust for life. Lots of people are going to be feeling a lot better about things, and that includes making investments. But why wait for that? This is what we've taught you on the podcast, that actually, while at times okay, yeah, you can follow the crowd and do what everyone else does, why not beat the crowd and get in it first? Now, on Friday, we're going to talk about some of the things that we've been seeing behind the scenes. But what I can do is give you some first-hand experience straight away. Property Hub Invest has not launched anywhere near enough deals this year to its investors it works with. And that's because the market was getting strong. It was coming out the mid-cycle wobble. If we refer back to the 18-year property cycle, optimism was there, listings were up, people were starting to invest, deals were harder to be done. We did deals, but far less than we wanted. Last week, when the coronavirus kind of stepped up a gear, our phone lit up. We weren't calling developers were calling us, and they want to do deals. Those deals weren't possible 2 months ago. Today, they are. And that's already changing. And while some vendors might not realise that if they want to sell right now, they need to do a stronger deal, they will do. So whether you're buying from a company like Property Hub Invest or doing your own sourcing and investing, it doesn't matter. What matters is that the opportunity for those who are willing to buy right now is huge. Because those who are going to sell right now are the ones that have to sell, who are in a position where they're forced to. And that means there's a discount, there's a price, there's a deal to be done. So for all the doom and gloom that we talked about, Rob, we're ending on a positive, but rightly so.
Yeah, exactly. On a human level, this is bad. We don't know how much worse it's going to get, but it's going to be bad. And of course, the human level is the main thing. But when you're talking purely about investments, you can have two completely different mindsets about it. You can have the mindset that most people will have and that you would have if all you did was read the mainstream media, which is a non-stop barrage of everything is terrible and will be terrible forever and it's getting worse by the second. Or you can recognize that there will be massive opportunities in this. And it's not an easy mindset to shift, but once you have, you just see the world in a completely different way. Like, to me, looking at everyone freaking out about the value of the stock market having fallen and talking about selling their shares, it just seems like such an alien viewpoint to me now, because that switch has flipped and I'm immediately seeing opportunity. So there will be no shortage of doom and gloom on the investing side on pretty much any media outlet you choose, but we will do our best in the coming weeks on the Property Podcast and also on our new market update podcast every Friday to give you not a rose-tinted view and pretend that everything's amazing in all ways, but maybe point out some of those opportunities and help you see some of the investment positives.
So it's your job to look after yourself, your friends and your family and other people around you. And it's our job to keep you informed. So we're doing that on Thursday when we're going to look at the budget and the impact that's going to have on not just property, but actually the wider economy, because that's more important right now. And then for the first time, we'll be podcasting on Friday as well. So a triple whammy of podcasts for the next few weeks. And we're going to be giving you our insights on the market. We're going to go into more detail than we normally would with investment opportunities. But for all the doom and gloom, I think there's going to be a lot of people interested in a bit of positivity. So like Rob said, while we're not going to pretend everything's rosy and fine, it is challenging times for lots of people right now. We'll also show you that it's not completely all doom and gloom.
So that's it for today. We'll be back on Thursday when we'll be talking about something you could have forgotten about by now, but it's actually quite a big deal, the budget. So we'll see you on Thursday. Bye-bye.
Bye-bye.